Bitcoin on the edge of a cliff? Some analysts think so. After months of mixed signals, the world's most popular cryptocurrency may be heading straight for a serious correction, and we're not talking about a tiny dip. Some experts are warning of a potential crash all the way down to $20,000, a level we haven't seen since the 2022 bear market. That's a 40% drop from current levels. If you're holding Bitcoin, trading altcoins, or just trying to make sense of the crypto market's next move, this matters. Because it's not just about one coin crashing, it's about trust, momentum, investor psychology, and what happens when optimism turns into panic. Today, we're breaking down why some believe a crash is coming, what signs are flashing red, and how you can prepare whether the floor drops out or not. What's triggering the $20,000 warning? Let's start with the basics. Why are people even talking about a crash right now? Bitcoin had a strong start to the year, fueled by hype around ETFs, expectations of interest rate cuts, and renewed mainstream attention. But that momentum has stalled. Volatility is creeping back in, trading volume is thinning, and multiple signals, both technical and macro, are starting to point in a bearish direction. Here's what's got experts sounding the alarm. Technical breakdowns. Bitcoin has slipped below several key moving averages and crucial support zones, indicators traders closely watch. This kind of breakdown often signals a shift in momentum from bullish to bearish. Without a strong technical floor, prices can slide quickly as traders pull back and selling pressure builds. Liquidity drying up. A market is thinning out. Trading volume has dropped, and fewer buyers are stepping in. At the same time, large holders, whales, are offloading Bitcoin. With less demand to absorb that supply, any price dip can turn into a steep fall. Because there's no one left to catch it. ETF fatigue. The Bitcoin spot ETF approval was a major milestone, but the hype around it has cooled. Prices surged in anticipation, but now that ETFs are live, there's no new catalyst driving demand. Without a fresh narrative or a big bullish trigger, excitement is fading. And so is upward momentum. Macro pressure. Broad economic conditions are squeezing risk assets. Inflation is still persistent, interest rates remain high, and recession fears loom. When the macro outlook turns uncertain, investors pull money from volatile markets like crypto. Bitcoin isn't immune. It often takes a hit when traditional finance goes into caution mode. Whales are moving. On-chain analytics show big players moving their BTC from cold wallets to exchanges, a move that often signals intent to sell. When whales sell, it puts downward pressure on price. It also shakes smaller investors' confidence, sometimes triggering a chain reaction of panic selling and rapid price drops. It's a mix of weak technicals and soft fundamentals. The perfect storm. Maybe. Why $20,000? Is that number real or just hype? The $20,000 figure isn't arbitrary. It's both a psychological and technical level with history behind it. Here's the context. In 2017, $20,000 was the blow-off top of the first major bull cycle. In 2020, Bitcoin broke through $20,000 again, kicking off the massive run to $69,000. In 2022, $20,000 acted as a critical support level during the brutal bear market. It's a level the traders watch closely. If current support zones between $25,000 and $28,000 don't hold, many believe Bitcoin will test $20,000. And if that fails, the next stop could be even lower. So no, this isn't just fear-mongering. It's a level rooted in price history and market psychology. And in crypto, momentum cuts both ways, fast. What could actually trigger the crash? Sometimes it only takes a spark. Here are a few scenarios that could turn bearish signals into a full-on freefall. Regulatory shock. If the SEC announces stricter rules targeting crypto exchanges or DeFi protocols, it could send shockwaves through the market. Fear of lawsuits. Forced delistings or tighter compliance requirements might cause investors to pull out quickly. Regulatory uncertainty is one of the fastest ways to trigger panic selling, especially in a market that thrives on trust and momentum. Exchange failure or hack. Crypto history has shown us what happens when a major exchange goes down. Mt. Gox, FTX, and others wiped out billions in value and crushed confidence overnight. A major hack or solvency issue today would likely have the same effect, leading to massive sell-offs, frozen withdrawals, and a brutal drop in market sentiment across the board. Macro market dip. Crypto doesn't exist in a bubble. When the traditional stock market crashes, whether due to inflation, interest rates, or geopolitical chaos, Bitcoin usually follows. Despite the narrative of Bitcoin being a hedge, it often acts like a high-risk tech stock in practice. A sudden dip in equities could spark a rapid decline in crypto prices as investors flee risk. Mass liquidation. If Bitcoin drops below a critical support level, it can trigger a wave of forced selling. Leveraged traders get liquidated, bots kick in, and the sell pressure compounds fast. It becomes a domino effect where each drop in price causes more liquidations, creating a rapid downward spiral that can wipe out billions in value within hours. Institutional exit. Institutional investors helped push Bitcoin's price higher during the ETF boom. But if those same funds decide to exit, it could lead to a huge liquidity crunch. Unlike retail, institutions move big money. A coordinated or large-scale sell-off could break support levels, crash sentiment, and trigger a broader wave of panic selling across the entire crypto market. In other words, the setup is fragile. One bad headline could accelerate the move. What happens if Bitcoin hits $20,000? Let's say the crash happens. What then? Retail panic. Many new investors who bought above $30,000 might capitulate, selling at a loss and fueling further downside. Altcoin carnage. Altcoins tend to move harder in both directions. If Bitcoin drops 40%, some alts could lose 60 to 70% or more. Mining pressure. If the price drops below the cost of production for many miners, it could trigger capitulation selling as they try to stay afloat. Sentiment nosedive. The crypto community thrives on optimism. A major crash could shift the narrative to one of despair, hesitation, or crypto is dead. Again, but it's not all doom and gloom. Could this be a buying opportunity in disguise? Here's the thing. Smart investors love crashes because crashes create opportunities. If Bitcoin does fall to $20,000, long-term believers may see it as a discount, not a disaster. After all, Bitcoin has bounced back from 85% down in 2015, 84% down in 2018, 77% down in 2022. Every crash has, so far, been followed by a new all-time high. The key is surviving the storm and knowing your time frame. If you're in it for the long haul, dips like these are part of the deal. But if you're short-term, unprepared, over-leveraged, that's when a crash turns into a personal disaster. What should you be doing right now? No matter your position, here's how to stay ready if the warning signs play out. Have a plan. Don't make decisions in panic mode. Know your entry and exit points. Reduce exposure. If you're over-leveraged or holding too much risk, scale back. Set alerts. Don't stare at charts 24/7. Set price alerts and be ready to act. Keep cash handy. If you believe in Bitcoin long-term, a crash could be your moment to buy low. Use cold storage. In times of market fear, exchange hacks and restrictions become more likely. Self-custody your assets. Above all, don't get emotional. That's where people lose big, not in the dip itself, but in their reaction to it. Crash coming? Maybe. Panic? Not necessary. Is Bitcoin going to crash to $20,000? It might. A market looks shaky, support is weak, and sentiment is fragile. But Bitcoin crashing isn't new. What matters is what you do when it happens. Are you positioned for survival? Are you making decisions based on hype or strategy? Now's the time to get clear on your goals, risks, and strategy. Whether this is just a correction or the start of a deeper plunge, one thing's for sure, crypto never stays quiet for long. Found this helpful? Smash that like button, share it with your crypto crew, and subscribe for real, no hype insights so you're never caught off guard. The market doesn't care how you feel. It rewards people who are prepared. Stay sharp.